Tuesday. CPI data just came out and we breached 18,000 on Bitcoin. We have statistical targets met for Bitcoin and Ethereum. We've got the DXY dropping low, getting its thing on. So yeah, it should be a really jam-packed episode. If you guys are interested in the daily content that we provide for you, be sure to like and subscribe to the channel. We come live to you Monday through Friday, 10 a.m. Eastern, sometimes 10:15 a.m. Eastern. Joined by Magic Internet Money and Burr Max over there in Dubai, and we just jump right into the content. And so we're going to start right off. I'm going to jump over to Magic Internet Money. We're going to take a look at Bitcoin.
Good morning, guys. We'll take a look at Bitcoin. It's doing all the interesting things this morning. Yeah, so really simply put, we are looking at the same levels we've been talking about for kind of weeks now, unfortunately. But it's always nice when targets get met, right? So this was the big thing we talked about previously. We were saying that we really wanted to get back above 17,174. If you go out to a weekly scale, you can see why this was the area that you were being held down from. So that's why we wanted to see this level reclaimed. You go to a daily, you can see boom, boom, boom. Then you can see the first chink in the armor here, close back below. You find support at the key level, gold pocket, range low with a weekly value area low, monthly value area low. A lot of things here. Nice move off and into our targets, which is the quarter two low at 17,567 and 18,017 respectively. I think it's 18,011 was the high. And I'm going to brag just a little bit. As you guys know, I always like to tinker with tools. I didn't invent the fork, but I did come up with a really neat way to project. And this was the projected fork. We were talking about it here. This is just from the prior session data, and it caught the exact high. So it's only designed to catch trend. If you're in the group, you understand that. You've seen that video. Really neat tool to kind of like improve upon use case. So I'll let Max go over yesterday just because from what I understand, he caught this back test really nicely. Didn't hold it as long as he would like, but that's okay. You know, it was still a nice trade for him. So the question now becomes, where do we go from here? Well, I think the obvious elephant in the room is going to be, are we getting a deviation here and going to run this range back? You know, I think it's a little too early to tell at this point. Because we still have, you know, some work to do. So you're still technically inside the range here. Everyone and their dog was probably looking at this as a triangle of sorts or an ascending triangle of some sorts. And you guys know how I feel about patterns. I don't think that they hold much weight. So we're going to kind of talk about that a little bit. I think this was what we were all talking about, was like something like this, what everybody was looking for. Yeah, there you go. Look at that. Couldn't have drawn it up any better. Rising wedge, right? It's supposed to break to the downside. Obviously, it did not. This is just a short squeeze, though. You have really good information coming in on CPI, but the writing was on the wall from a market structure standpoint that you were looking for this. You had this pseudo descending triangle that faked out to the upside, consolidation above support. This was the key support right here, though, coming down to this like 16,826 down to 16,761. If you really started losing this, I was talking about how I don't really favor, even though this was the overall range point of control, I don't really favor a long from there because I feel like at that point, we're probably just going to run it all the way down to the range low, right? And that's where we want to take our swing longs, is from the range low. If you get in on these, to me, these are intraday positions that you're taking profits on pretty quickly. So where do we go from here? It does have the potential to reject and come back to the range. And we are technically living outside of the range right now. But if you start breaking down below 17.5 and then find your way back in here around 17,400, you know, it's an issue. I would start looking at this to come back to this November NPOC. And then we're talking, you know, are we going to come all the way to the low of the range? And I'm sure we have new gold pocket to be looking for as well. If this is a top, yeah, and it's no longer at the bottom of the range. So maybe this does continue up a little bit. I don't know what that was for, but oh yeah, that was TP. So I took a scalp short. So my TP was just hit. I scalped off of this fork, which was nice. So I think it's actually, yeah, right here. You can see there's my TP. So you guys are welcome for the heads up, I guess. So that's the first one. Basically, I was just front running the session VWAP. But yeah, That's it, guys. Very, very simply put, we're just playing it as a range as it is. 17.5 still needs to be held as support, close above that. And if so, we can look up to 19,150. And that is the old point of control on TradingView and the TPO point of control on ATAS, plus your golden pocket from low to high. And if you're looking at this, like when do things change? When can I say that, market structure has changed? It's a really unpopular thing to say, but you can't really call bottom until you change market structure. And that's all the way up here around 21.4 to 21.6. You would need to take this high out, form a higher low, and then make a new trend. That trend then is reversed, and everyone that's talking about a double bottom here can, they can sing exactly that it's a double bottom. So until then, trade the levels for what they are. Nothing has changed on the macro. One thing I'll touch on is SPX, right? So this box right here, I was talking to Rivalry in the group about it because we've been discussing the idea of our fund folder here on the Shark, right? And I think we did take the high here, did we not? 966. Yeah, we did by just a hair. So you've made a new high. You are getting a little bit of a rejection. So I'm sure people are looking for a gap fill here. We'll see if it does actually fill on the gap up. But, when you're looking at something like this on a Shark, this can actually extend all the way up here to like 41.90 because this is a pretty, extended pattern. You can see it can go all the way to like a .133. Okay. And as long as it's not exceeding a 2.24 expansion right here in confluence with that, it's valid. So this is a pretty wide completion zone, but it is coming into macro resistance. So you really haven't done anything in traditional markets yet either. CPI did come in lower, but we still have the FOMC tomorrow. I think some people are speculating 25 basis points now on the CPI coming in lower. But I think at the end of the day, you're celebrating 7% inflation, which the target rate of the Federal Reserve is going to be 2%. That's just the target rate for them in the current banking system. So we have to have a certain level of inflation that's good for the economy. 2% is that predetermined model. So celebrating 7% is not really like celebrating much. But the very first stage of a pivot is the slowdown of rate hikes. So we've been going 75. Even if we get 50, I don't think it's terrible in terms of, that first sign of a pivot coming. So if we get 25, I would be shocked. I'm sure markets will go absolutely wild over that. And if that's the case, it may even break through this level of resistance. And if it does, you've got pretty obvious targets. The obvious target on this next one is going to be the gold pocket, right? That's your most obvious area to look for from your A to D leg. And you've got the yearly pivot just above it. So one could just box this off and say, I would be essentially monitoring this high in this gold pocket at that, if that's the case. Otherwise, it's business as usual. Trade the levels for what they are. This is not a place to be looking for longs still. This is resistance until, otherwise basically told. I mean, price action is king. And to me, I just can't justify being long into this region unless you were longing the support we've been on about, which was 39.23. We've been saying if you break 39.23, we'll see this box. But 39.23 thus far has been holding. So we have to keep that in mind. DXY kind of had a mind of its own for a little while here. And you can see we've been talking about potentially coming all the way back down to 102.21. The only thing that we need to mark out is this low right here. This is the low I would be interested in before that number. And we've gotten pretty close to it, so I don't see why we wouldn't take it at this point. And we can add an alert to it here as well, just because it's always good to get that alert so that we know it's crossing, right? So we're just looking to see if this gets taken out. Can we flip that into support? We obviously did not flip 105.34 back to support. So the XY selling off would be coming down to, in my opinion, 102. I still think that's the area this is going to come down to. But we'll take a look at this low here, and that is 103.41. So this is the zone that needs to hold. If not, I mean, it's not a good look, right? And we've talked about how this is a multiple year pattern that's at play. It's a reversal pattern. And obviously this one is playing out very, very well. Front running a lot of targets up here, order blocks, all kinds of stuff for those that use them. So not kind of surprising that it happens that way. It's just, that's why I say you always got to be prepared. The market's not always going to go exactly the way you plan it up. You just have to make sure that the positions that you're taking protect your capital along the way. So I don't really have much else, we've been talking about a lot of these scenarios for a while, and CVO kind of touched on it in some of the public ones where, we'll get the run up into CPI and FOMC and maybe hit some of these targets, which, again, to point out what CVO, mentioned earlier, he said statistical targets. It's something that we've brought up quite a bit. We know that there is a percentage likelihood that we are going to come into some of these averages, because that's all this is a high time frame average. So, you play the law of averages, and you start looking at, okay, well, are we holding support? You're holding your bi-weekly caveman average, right? So now we're holding it on a 2-week average, looking for this monthly average. And then, are we holding the weekly average? Are we holding weekly structure in terms of points of control? That was a big thing I was bringing up in the last update was, if we get back above this level right here, you can see that your points of control, which I changed them to red to make them easier to see, because I noticed that my value area high and low are also white. So I haven't gone through and changed them all, but you'll notice that they are shifting upside, right? Up, trending up. Now we need to see this point of control trending up as well. It has not shifted yet, which is not a great sign for the move up. You want to see this coming up with it over time, but the week is still really young. It's only Tuesday, so give it a little bit of time. But you can see, if you were to look at this in terms of volume profile, what do you want to see on a trending day is like a thin volume profile that is expanding up with price. If we went to like a daily, you would probably see it even more, but the weekly is a pretty good example of that. You can see that you've got it right here, really thin. You've got like a reconsolidation, really thin, reconsolidation, really thin, and it's trying to put in another one up here. And so what it'll basically be is, will this end up being consolidation for the next leg up, or will we root around up here before coming down and filling in some of these inefficiencies, right? So to me, the only trade that was available here, the best trade, was a short. So I did take it. I've already scalped that position for about 1.5%, which on a day trade is actually really, really good. That's not a usual day. So, well, the last couple of days, you could have probably made that if you were really, really good with your positioning. But 1.5% on a day trades, there's no need to be greedy, especially when we know we're probably going to get volatility tomorrow as well. So hopefully that's made sense. I don't see any questions, so I'm going to turn it over to Max. Still feeling a little under the weather. Nose is all clogged up, so I'm just going to cut it short here.
Man flu, if you ask me. But anyway, moving on. Yeah, so the trades that the trade I took, I mentioned it in the group at 6 a.m. I'm going to give you a quick insight to what the group looks like, I guess, for the people that aren't in there. But I mentioned there's a Dalton, but it was only on TradingView. The XO Dalton was a little bit, well, there wasn't a Dalton on XO, but on TradingView there was. And, I've been loving trading the first bounce from whichever value area, whether you're at the high or the low. Love trading the first bounce. And today you had a untapped daily, which is also the weekly open. So that was the area that I was looking for a long. And then I also posted like a couple hours later where I was looking to short. And this kind of bit me on the arse later. And I'll go over why, because we also had bearish divergence here. So when you came down to the level, it was very nice. You literally bounced straight off it. If you look at it on XO, you had positions changing hands at the bottom. You can see you had 230k open interest, which is okay. It's positive, but you had negative 1.5, so it's some positions changing hands. Straight bounce away from it. Delta switch, increasing open interest, and then there's your buying imbalance for your entry. And what I did, which I regretted, was I moved the golden pocket from here where it was, because it front ran it earlier. I moved it down to here. And then when we came up and we got this swing failure pan on the golden pocket, I needed to go to the gym, and I was like, I'm just going to close out on my trade. And by the time I'd got to the gym, like 20 minutes later, we had one of the members in the group be like, I can't remember what he mentioned, but he was like, there's the pump. And I was like, fuck. Because I'd effectively closed out my trade 20 minutes before all this begun. So it is what it is. But, I sit in spots, so still made good money from today. So it's been nice for it to rise. Now, the one thing I will mention on the rise, I'm going to hide the marked, because for now gets annoying when you zoom out. Each of the rises has been on very large degrees of open interest, which is to be expected. So if you look at the funding rate on Bybit, you can see the market is with much lower down than it is on spot. I think the funding rate was like 0.3. Well, it's like 0.360, something like that, which is very high to the downside. So it's very low, very high, but you get what I mean. It's important to take note of that. And that released, here. And had I really looked at that and thought, what, we're probably going to get squeezed because of how we are positioned on the futures market compared to the spot, you can kind of gauge that, okay, price is going to push up. And you can see that on every rise, you've had a huge decrease in trades. The open interest has fallen off a cliff. It's mainly been shorts closing out on each of the rises. The interesting thing that occurred on the first rise, and I did mention this in the group, and I said this candle here is very interesting. And the reason for that is if you look at the open interest and the delta on that candle, you can see a lot of people were selling here. That's negative 12 million delta on that trade, on that candle, and there's only positive 3 million open interest. So looking at that, we can kind of identify, okay, there's been a lot of selling take place, or maybe some shorts, maybe some shorts did enter, but ultimately they don't add up. So we can look at this and say, okay, all these people that were selling here, their positions were taken over by someone else. And it's not shorts because the delta is negative. If it was shorts coming in, you'd have open interest increasing. But the fact it's open interest isn't really there, you can tell that it's longs closing out. And yet the open interest, their positions have been taken over by someone. And he never really came back below that. Well, he didn't come back below that wick. So you could kind of look at this and say, okay, maybe this isn't over this trade. So if you were in a position, that was kind of your signal to not be selling and to hold it a little bit. Especially with the news coming out, we always can expect volatility. But the fact that someone there is geared up a big position, well, you can kind of presume who is holding the market up here. It has to be the market maker. This is probably retail selling into the market maker, or maybe one market maker that's got some inside information going against the other. We can always theorize on that type of thing, but it's a very interesting candle nevertheless. And whoever took that position, it's clearly paid off. You know what I mean? You've had a huge rise up again on decreasing open interest. Nothing to really mention on this one as such. It's not been as interesting. You didn't get like a cool candle afterwards, other than the fact that you've had shorts pretty much piling in since that move. And when that is the case, well, sometimes they get punished. This time, I'm hoping some of them have paid themselves. I gave the group 2 levels to watch for where I am, looking to hedge myself, which I did just do on a sign of break of this level. So it's the low on the 5 minute, and you did get strength there. So you've got many selling imbalances, increasing open interest, and high negative delta. That is a sign of strength for the move down. So I have just hedged. Now, what I would have preferred, and we still may get, so it's why it's only a hedge and not a leveraged position. And I will happily jump out of that position if price starts to get above here. What I would prefer is if we came up to the quarter 3 low, which is at 1890 off the top of my head. There we are. Came up to here, took out all of these shorters that have entered here, got some positions changing hands, and then we SFP'd the high that was just made. That to me would be a trade where I over leverage, and then again, another loss of this level, I would have added position size to that. Now, the fact that we've come down here, these can kind of pay themselves a little bit. These shorts, if they do, like on Magic House, but if they don't, it's great. But if they do, it kind of weakens what we were expecting here. But it has to be said, the rise hasn't been that strong. Yes, the news is great. It's not great. It's okay, but it's not. The move up hasn't been like total strength in the market. So don't be thinking, oh, this huge rise that we've just had is strong. It's really not. All the big moves up have been on decreasing open interest, which is okay when you have buyers come into the market. But as you can see, we've not had buyers, we've actually had shorters. So it's quite the opposite of what you'd be looking for price to then sustain these levels and keep going higher. The fact you've had shorts coming in, well, it's the opposite of what you want to see, really. But yeah, everything can change if you get above the Q3 level, because the levels above that, well, they're quite a bit higher. But I don't like to speculate in them types of things. I prefer to trade what I see and level to level. But yeah, I'm pretty quick on that. To be fair, move up's been relatively weak. The move down here that we've had, it has shown strength. Single prints, we are now in them. We are. So this one here is something to keep your eye on. Now, we did have one from, it's now deleted itself because it likes to only stick to the threes. But I would really look at this single print from this level here. Let's put it at the top of that block. So it's about 17,560, and it was up to here. Now, the reason that I like to do them this way is because this here is just where a candle has, one candle's closed and it's gone to the next and continued to move. So I like to keep them rather large. Granted, that's not the theoretical way to do it, but it makes no sense for when one candle closes to just be like, oh, okay, the single print stopped there. It doesn't make any sense to me, because this is still, effectively one big large move up. One big large. We move. So yeah, we are certainly in the single print now. And the real interesting thing about this area is where that single print comes down to. It's 17,560, which is an area where I would say is very key to hold, because it's the Q2 low. So that's the old low that we made back in June, I think it was, which I would say right now is a very important level to hold. Now, if lost, well, you can certainly be looking for some lower targets. Well, initially I'd be looking for the golden pocket. Where have I pulled this one from? I pulled this one from the low that we made for the day, which was also a golden pocket. So I'd be looking for that initially, and then you can probably look to the previous week point of control. And if we lose the the week open, which I'm going to delete that level now. If we lose the week open, you've got many targets to the downside, and I would say it all starts with that Q2 low. So it's really a level to hold right now. And the fact that these rises haven't been the strongest, it does put some weight on holding some of these levels. You do need to see buyers come in at some point to be like, okay, this is a good price for us to then hold the market up. The fact we're really yet to see that, well, it does cause issues for the rise. Now, it can all change if we get back above this level and buyers start to come in, of course, but we're yet to really see that. So that's all I've kind of got. They're the levels that I'm looking for and what I'm kind of expecting. But yeah, CVO, you're up, my man.
Yes.
Were you just singing?
I was singing, bro, when it's up. Cardi B or whoever. Yeah, so today's been fun. Max and I, we were doing some live trading in the group this morning at the 8:30 run. So it was always an interesting sight when you see some targets getting met live. But just looking at ETH from what we've even been covering here on our morning streams, right? So came into this week looking at previous week, right? So this was the region. I actually went with long on Bitcoin versus Ethereum at this time frame. This was the other night, I think it was Monday, when we came into the same area on Bitcoin, right? We came into the previous week low, came into the golden pocket, and I went Bitcoin versus ETH at the time, just because we were losing this region, and I did anticipate possibly coming down a little bit more. But either way, this was the move. Once we got the reclaim right here, it was beautiful, right? Looking back, obviously hindsight, but even, this is exactly what you want to see, right? Lose the level, right? Previous week Val, come back up, get the reclaim. Not only is it that, it's your golden pocket. You could have waited for even the VWAP claim, just a little bit above that, 1250. I was in a position earlier last week over here at 1228, and I ended up closing it out on Saturday right here. Obviously before this pullback, and then I essentially, like I said, switched into Bitcoin at this region. So pretty much gave up the same gains at the end of the day. But either way, for ETH, yeah, nice run, right? Runs it up, back testing here. I think that Bitcoin came down and tagged the daily pivot around this time frame, which for ETH was just back testing, coming down, front ran the local golden pocket just a bit there, and then basically ran it back up, held the point of control, and then from there up we go, right? So met our statistical target that we've been looking for, this 1348, pretty perfectly. So something I'm looking forward to, similar to Max, is the potential, to run back up and take these highs. And then, it's one of those things where you really do have to pay attention to what the reaction is at this time, right? So it's a cliche term in the sense of, could go up, could go down. But, if you come up to this region, start holding above, closing, candles above here, especially, higher time frame like hourlies, 4 hours and things like that, then, we might have a run for our money and potentially up to the golden pocket here for Ethereum, right? 1349, 1368. But if you don't get something like that and you get something, pretty quick where you kind of just do one of these deals and then you come back and close and, you can start looking at this on the 5-minute, on the 15-minute, things of that nature, come back and lose this monthly level, then you have the potential to get that, the SFP, you got the, you're going to run all the stops from everybody. I'll zoom this out a little bit, right? So if anybody's short or been short, in this region, most people aren't taking the short at the exact high, right? Let's just be honest there. But where their stop loss is going to be, if you're taking a short in this area, you're going to put your stop loss above the recent high. So that's where we come in. Note that is exactly where the monthly level comes into play. We ran up to it, but did not take it. So something like this would effectively close out, a lot of people right here, more than likely. And then after that, we did leave a lot of things behind. So, just a clear idea here is that, flip the monthly 1350, we're probably going to challenge up into this golden pocket. That's the upside idea. As far as downside at the moment, we possibly go down from here already. But if you get something like this, that is definitely going to be an opportunity at hand. Local golden pocket at this point now, right? If let's just say that that's the high, or even where we're at is high, brings us all the way back down to 1170. Well, what else do we have down in 1170, right? We left an untapped daily down here in this region, 1167. Coming down to this region and, really seeing how things, if you get that, seeing how things kind of play out, you could challenge into some of the lower levels as well. But either way, this would become a really valid target in the short term here, right? So, you still have things along the way. You got the weekly open right now and, things that are going to come up at a little speed bumps that, probably wouldn't just nuke straight down. And on the offset chance, it might actually, like we come into some big news event tomorrow. So maybe it does. But one thing I wanted to point out is that last night, right, we were looking at the little inverse head and shoulders here that I imagine, I didn't really see too many people talking about it, but if you were going off the old pattern scale, right, I'm an old pattern guy. Don't really use it too much anymore, but that was a perfect measured move, right? If you were looking at it in that sense. So there's a lot of reasons why where we are, is a very important area, both on Ethereum, on Bitcoin, a lot of the market as a whole. We just showcased that we could be at a topping point around the SPX. The DXY has a little bit like further to go down before that might get a little bounce, like things of that nature, right? You're kind of in like top territory, short-term stuff, right? Like, and then, the validation for that, of course, just like Max was just saying, yeah, if we flip, what is it, Q2, Q3's low, right? And we take it up. Obviously, that's what you'd be looking for Ethereum. It's pretty much this monthly level, right? 1350. If you flip that into support, we're probably, at least going to challenge up into this region. But in the short term, I think the news right now is going to, whether or not the news means anything to me, it forces people to, get really biased. So you got the SBF arrest that went down last night. We had barely anything on the CPI as far as, negativity. And then tomorrow, if you get, a nothing burger, I think that, that's a recipe for people to kind of FOMO into the market at some pretty big resistance. So it'll be interesting to see how it goes. But this is definitely, an idea that I'm monitoring, pretty closely here at the moment. And, that's, like I said, this is a pretty, 13% move to the downside, nothing to shake at. Essentially, you'd be nowhere we haven't been since middle of November last month. And that's really what we aim to do here, right? Is that on all this price action, we've been making really decent moves here. I think we took out 100% move on Ethereum last week, making some really nice gains this week on Bitcoin and Ethereum, capturing some of these ideas here. This is, how you increase your portfolio and increase your bag essentially, while the majority of people are just holding and not really having any opportunity to gain anything. So Takes a strategy, takes a plan. This could very well not play out, right? This could just shoot straight through. So it's just something you have to kind of monitor, keep track of. But that is an idea I'm tinkering with at the moment. So coming down to these regions once again, if we don't hold this region for Ethereum, and zooming out to our larger time frame, right? Not all just small stuff, but this major quarterly range here that we pulled up from earlier this year still holds pretty true. Q2's point of control, right, at 1221. You can see very clearly how this is reacted along the way here. We had the untapped monthly, which has effectively been tapped now. That golden pocket I spoke of, this is our next target, and then flipping this region would obviously be the area you'd want to look forward to challenge into. I think we got a couple of we got an untapped weekly up here. So that would be that's the cases, right? So we are at major resistance at the moment. So not the time to be looking for longs, right? Potentially time to look for some shorts, but really just kind of be a little patient here. You might get the chance to come back up to this region, knock out everybody that's been shorting in this whole area. You got early shorters, for sure piling in right here. Not early. I mean, this is a decent area we can bring a short. Don't get me wrong, but most people, if they're going to be tight, you're going to put stop loss right above here. So to see a move come back up, knock out all the shorters from today, knock out the shorters from basically this entire area, is definitely on the cards. And then a move back down to this region. So, like I said, speed bumps along the way. You got Q2's point of control. We've got all kinds of things. It's not to say you just get a straight move down, but that'll be the short-term play, in my opinion. What else do we want to look at here? I'm not going to go into Doge here, but because it's a really messy chart, I need to clean it up. But what a mover, right? Like we do trade Doge pretty actively in the group, at least I do. But you had this move. We actually hit the monthly key level here for Doge pretty early in the month. I think it was like on the 5th. Yeah. From there, a decent size move down to the golden pocket, right? 23% move there. And then since then, right, same time, Bitcoin, Ethereum, Doge, probably half the market all kind of came into the golden pocket at the same exact moment. You already got a 12% bounce out of that. So Doge moves, man. Like, and this is like, you don't even need leverage on this. You have to go into leverage positions as you short, but you can do 1x shorts and just capture the 20% move. And you don't have to, wake up with the leverage sweats overnight. But yeah, should be an interesting time. The timing of this is very peculiar. We've been discussing that a lot. If you watched last night's Debate Crypto episode and the Thursday one, and then on top of that, obviously the videos that we produce here every day, we've been anticipating these levels. So it's very important to kind of just be aware of where you are on the chart and don't FOMO into anything. And I think that's about all I got right there. And then, like I said, the news for today, I guess, is the arrest. I don't know what's going to come of that. I guess SBF was supposed to talk today or do something, but either way, I'm really tired of hearing the letters SBF and FTX and all that stuff. But it is going to be making headlines. And while everybody's worried about that and looking into that, we're nailing targets. So that's the idea at hand. We could pay zero attention to any news, and it would still, we'd be okay, having a good time. But let's see, 33 minutes. That's about the time frame we try to get in here. So if anybody's interested in joining the Leading Crypto Discord server, we do live trading sessions a couple times a week. We do a members only market update Wednesdays and Sunday nights. Sunday right after the weekly close. Get full access to all of our analysis. We got some active traders going on in there all the time. We have a 14 video step-by-step academy as well. Teach you all the tools and resources that we use daily, verbiage, things of that nature. Link for that is in our description box below. Aside from that, what else we got coming up this week? So tomorrow, actually, be sure to tune in to Sin City Crypto. Tomorrow, Magic Internet Money over here to my left. He's going to be co-hosting with Gareth Soloway on Sin City Crypto. So be sure to give their channel a follow. Tune in for that. It's going to be 2 p.m. Eastern, essentially for the Fed decision. So that'll be a fun time tomorrow.
Is that at the time of the Fed decision?
Yeah, they're having in the afternoon, around 1. So it should have some volatility. Be good. And then, as always, we're live every day here. And then Debate Crypto tomorrow. You did yesterday, or not tomorrow, but Thursday. Yeah, Debate Crypto on Thursday. So we're all over the place at this point.
Yeah, can't miss us. And then, yeah, otherwise, we'll see you all back here tomorrow, 10 a.m. Eastern. Enjoy the, hopefully we get some more volatility today. Enjoy the trading, and we'll see you all then. Until next time, everybody.